Good morning, guys. It is Thursday, January 25th, 2024. This is Bathrobe Business. I got my coffee and I got the news. So I got several stories to share with you guys. The first being the most important about the U.S. economy. So there was a lot of debate about if GDP was going to grow this year. Well, it did. Just for the fourth quarter alone, the U.S. economy grew by 3.3%. This is overestimate of what Wall Street was expecting. Wall Street was expecting about 2% growth for the fourth quarter. Overall, the U.S. economy for the year grew by about 2.5%. This is again higher when Wall Street was expecting zero growth for the year. So the U.S. economy is doing very well. This is one of the other reasons I always talk about there's not going to be rate cuts anytime soon. There's no reason to do a rate cut. Even if inflation slows, which it's slowing, but we're still at a 3.5% inflation, right? We need to be at 2%, so we're about 1.5% higher than we need to be. But even if inflation slows, what is the impetus for the Fed to cut interest rates if everything is going fine? Homes are selling, people are buying things, job growth is, even though with job cuts, is remaining steady because there's still more position open than people that are to fill them. So there's no reason to cut interest rates. The U.S. economy is doing very, very well. I know a lot of people like to take the political angle. It's an election year. They're going to cut interest rates, et cetera, et cetera. That could happen. I'm not taking political pressure off the table. But right now, even if you're taking the political route, there's no reason Biden needs to put pressure on the Fed simply because the U.S. economy is doing very well. Every indicator is showing it's doing well. Now, we as individuals may think otherwise. I know I have problems with how the economy is being run myself. I'm not saying I don't. But when you look at the data is strong. And so I don't see a Fed rate cut coming anytime soon. Definitely not in the first or second quarter. We'll see what's going on in the third and the fourth quarter. Obviously, this is judged on a month-to-month basis. But so far, I see nothing that shows there's going to be any rate cuts this year. Next story. This one I'm going to mention in passing because I just think it's interesting. Again, we talk about inflation as a local issue, but it's a global phenomenon. So Turkey hikes its interest rate to 45%, 45% interest, as its inflation nears 65%. Remember, we've talked about inflation globally. This is just another data point to think about that this isn't just a U.S. phenomenon. This is a global phenomenon. The other thing I want to talk about globally is Europe is still holding their interest rate steady. So the European Central Bank is not doing any interest rate cuts and is not even entertaining it. We've talked about this also a few weeks ago as well. Next story I'm going to get to is Tesla. So Tesla's best days may be behind them. A bit of an exaggeration, but not necessarily untrue. So shares of Tesla dropped 8% after the company warns of a slowdown in 2024. This should come at no surprise. So Tesla's facing multiple pressures. The first is increased competition, globally and domestically. Globally, we've talked about how Tesla is not even the best-selling electric car abroad anymore. And the European and Chinese markets were always huge for it. In Europe, it's being outsold by Volkswagen. And in China, it's being outsold by their local brand, BYD. The interesting thing about it is, years ago, China was very loyal to United States brands. Foreign brands were preferable to domestic brands. That is no longer the culture of China. China's culture has very much shifted towards products that are domestically produced. So Apple used to reign supreme. They're now in second and third place behind local Chinese domestic manufacturers. Tesla used to reign supreme. Now they're behind BYD. China's economy is changing and it is evolving. And because of that, competition is ramping up. In addition to abroad competition, Tesla's got issues domestically because domestically, every single car manufacturer has a car company now. So they cannot just go into the market and say, we are the only option. In addition, they're cutting costs. They're cutting prices, which is hurting their profit margins. And lastly, I want to talk about an issue nobody ever talks about. Tesla has not updated their models in like 10 or 15 years. It is the same damn car that they have been producing while newer, sleeker, sexier models are out on the market from other companies. So as a consumer, why would you buy a Tesla that has not changed since 2013 when you could go out and buy a BMW, a Mercedes, a Ford, etc., that is a brand new model that looks sleek, that looks modern, and is going to compete just as well as a Tesla in their quarter mile and their acceleration and their range, etc. Tesla really has to change things up in order to survive. And this is on top of the stuff we've talked about on this channel as well, with labor unions and domestic production issues, et cetera, et cetera. There are recalls from a couple months. So Tesla is really starting to become a real car company and not just a startup where they can do whatever they want without repercussions. They're actually having to face real market forces. Next story I'm going to talk about is one that is near and dear to my heart: the failure of venture capital. Now, I am, if you watch this channel, I'm not a communist, but I am a capitalist that supports Main Street over Wall Street. I think Wall Street is corrupt, rigged, and it takes advantage of not only our U.S. tax system, but our U.S. laws. So it always brings a smile to my face where I hear about hedge funds failing, where I hear about venture capital or private equity firms failing. And 2023 was a great year for these failures. So a lot of this data is from the New York Times. You can go and reference this article. Carta, a company that provides financial services for many Silicon Valley startups, said that 87 of the startups on its platform that raised at least $10 million had shut down this year as of October. So this is for 2023. Twice the number of all of 2022. From 2012 to 2022, investments in private U.S. startups ballooned eightfold to $344 billion. The flood of money was driven by low interest rates and success in social media and mobile apps, propelling venture capital from a cottage financial industry to a largely on a road, operated largely on one road in Silicon Valley town to a formidable global asset chain akin to hedge funds or private equity. During the period of venture capital investments, 7-Eleven and Sesame Street launched their own venture funds. Companies worth $1 billion or more exploded from a few dozen to more than 1,000. According to a report from PitchBook, approximately 3,200 venture capital firms in the U.S. have gone out of business. These startups had raised $27.2 billion. The report notes that 3,200 was probably on the low side, as many businesses shut their doors quietly. I think this is fantastic. I applaud this. I think this is great news for the economy, and I think it's great news for, if you are a capitalist, this is great news, because these companies do not operate under normal laws of capitalism. They operate off of fairy dust, and these companies closing is fantastic. It makes the market healthier. It gets rid of stupid ideas that make no sense, but they can print money indefinitely with low interest rates. This is why high interest rates are good. I pray to God that Jerome Powell does not cut interest rates, because this is how an economy is supposed to operate. These bastards closing down is great for the U.S. economy. It's great for Main Street. And it's even good for Wall Street, because it makes those other companies more efficient. All these job cuts we're seeing, all these restructures we're seeing, all these changes we're seeing is a result of high interest rates. And this is how the economy is supposed to function. That's pretty much it. That's my video for the day, short and sweet. I'll be back tomorrow, Friday, so I hope you guys have a productive Thursday. I'll see you in the morning.